Good evening or good morning, depending on when you're watching this video. This is ahcharts from ahcharts. This is weekly update. Today's date is June 7th, 2026. Time of recording is 10:11 p.m. Eastern Time. I'm in New York. So Eastern Time, New York. Let's look at the weekly updates. Let's start with VIX. So had a crazy Friday session. We were due for a pullback. It was not expected at that time. However, I was anticipating some sort of pullback happening. Wasn't anticipating such aggressive pullback within a single day. I thought it would have been spread out within a week or so. But anyways, it happened. And let's take a look at what I see here for the charts moving forward this week or for the following week, but this week mostly. So let's take a look at this VIX. The first thing I need to look at VIX here is the demand zone and the last point of support, which I've been talking about for a while in the Discord. So that area that I'm talking about is this entire zone right here. This was a major demand zone that I've been talking about, where I said we either see a bounce here, and if you fail to hold that level, then very likely you're going to come down and you're going to bounce here. But anywhere within these zones here, a bounce was expected to take place, because if you go back and you look at this level all the way back here, this has been a major demand zone for VIX. This is where sellers in the market tend to start hedging for any side of downside in market. So they would go long VIX. And that's exactly what happened. This is a level to be careful with. Once price gets down to this level, then you got to be careful with the market. And the market is over leveraged. It's something I've been talking about over and over. I've been telling the team the market's over leveraged and to be careful. I think as of Friday, was it Friday? I think last week, Friday or Thursday evening, actually, I put out. I've been talking about how over leveraged the market is. I've been talking about a pullback that's coming. Let me see if I could find it here. So yeah, so this is it here. This was put out Thursday evening, and this was the path I called. Had a pretty, we actually pulled back way more than I anticipated. My price target was 740 on SPY for a pullback. I'm not sure how far we came down. And for QQQ, I was looking for a pullback at this level here, which is 722 to 717. We came way farther than that. But nevertheless, this was the forecast going into, I think, Friday when I placed it on Thursday evening. So I had a pretty decent pullback that I've seen. And now we're going into this week looking a bit bearish, but also looking for a bounce to take place. Possibly a failed bounce. So now VIX is currently trading within supply zone. So we had a 40% day. It's possible you see some retracement here in VIX and maybe some more upside. But if you continue to move up, I expect this gap on VIX to get filled, which is at 2217 to 2434. So going back here, this has been a supply zone for VIX. You tend to come up sometimes, but then you get rejected here, So it's a level to note that it is possible for VIX to get rejected at that level. So we will be watching 2044, 2183 level and the gap of 2217 to 2434 if you get any sort of like move that does something like this and then come back down, retest, and possible more upside. We don't know, we'll see. But this here is a possibility that we can see take place. A pullback more upside. Not saying that's going to happen, but it's a possibility that we need to look at. All right. So let's take a look at the overall market for SPY. So for SPY, what I'm seeing for SPY, let's look at the daily chart first of all. So what SPY is doing right now, it is technically correcting this pivot low here that we've had. So you're just correcting this entire move. So key level, I will be watching for VIX. VIX has completed an ABC retracement on the hourly time frame. I'm going to show you what that is like in a few. But key level here for any pullback to correct this entire move would be 698. Let's say $700 would be a $700 target. If you take your fib retracement from the bottom here to the top, then your point 0.5 is right over here. So your point 0.5 to 618. You do have a gap here. So that would be in a very bearish case scenario, like really crazy stuff happening. You could see a very deep pullback. I'm not going to call that, but key level we're watching here is this 0.5 retracement, or is this $700, 698, $700 level I'm looking at for VIX, retesting this level here. And if you pay attention, whenever we came back, you tend to retest this level. Over here, you came very close. Did not make it that far, but came down. So which level you think we're going to be looking at again? Every time you break out, you come back, you retest this level here. You did the same thing, break out, you came back, sort of retest this level here, but didn't exactly retest it as perfectly as this one. So the key level that we're watching again for any pullback to correct this entire move is a retest of this breakout level over here that we will be watching for. So those are the two major levels. This here is the major level we're looking for. Now, going into this week or tomorrow for immediate trading levels, I will be watching for. Let's go to 4-hour chart. You could actually see it on the 1-hour chart as well. Is 731.49 or 731 right within this area here and this gap. So this would be a key level where you can see a bounce. There's a gap here at 724. So you could see this gap get filled. Whether it gets filled tomorrow or we get a bounce and come back and fill this gap, I don't know. But it's a gap. It's a level and it's a gap that you need to be aware of, that we could fill that gap. On the 4-hour chart, we were in a rising wedge. Let me see if I could pull this up really fast. I don't have a bunch of indicators open up here. Okay, we were in a rising wedge and we were forming bearish divergences on MACD and RSI. And the algorithm that we use in our indicator has also printed exhaustion or euphoria, which means it printed a signal that there is going to be an incoming pullback. So now we've had an ABC retracement. The market moves in a 5-wave to the upside. When it corrects that 5-wave in a bullish market, it moves in a 3-wave to the downside or a 7-wave to the downside, but it cannot invalidate the pivot or starting point. If price breaks below this, then the entire wave count needs to start over again. But here we are, key level. So what am I looking for now going forward? I'm looking for a 7-wave move to the downside if the market continue to push to the downside. And this here would be a WXY correction. If we continue to push to the downside, I'm looking for an WXY, which is WXY. That is 2 ABCs to the downside. But for now, we are trading key level here. Want to see price respect this level over here. If price starts to break this gap, very likely you're going to come down and move down even more. And the key level here would be a $700 level. That is SPY. For QQQ, same exact thing for QQQ. We've had an ABC. Let's go to the daily chart. Same level I'm looking at here, which is that not level, but same thing, a retest of this level, which I talked about. You've had it over here. Let me show you again. This is QQQ, came back, retest the breakout. You've had it. So now we're looking for price to come back, and you've had it here as well too. Almost same thing. You just breakout, retest. So what are you doing here? You're looking for a retest of the breakout again. So that's exactly what I'm looking for again. If we're correcting this entire impulse move to the upside, then looking at this, I think there's possibly going to be more downside, or you're going to see something where we saw over here. Big volume, Same candle, big volume, almost the same thing. And you're gonna see some sort of sideways movements. Let me see if I could pull this up here. Don't think I have it. Anyways, I'm gonna look for it in a bit. Anyways, yeah. So here it is. Let's see if we could look at this here. I'm just saying, like, if we get some sort of sideways movements that come down and retest this level and correct this entire move here, so that's possible as well. But key levels for traders, key levels I'm watching as support is the 694.86, and there is a gap here as well. So this here would be key level to pay attention to for any sort of bounce. Your price would come down and price may bounce. So key level going, if you're trading going into this week, this would be your key support level where you're looking at. If we get an ABC that continues to trade lower, then you can see a rejection and a break to the downside. This would be what I would look for to come down and correct this entire move here. There is a gap at the bottom here, but we're not going to go that far to say price is going to move down there. Let's take a look at IWM. So with IWM, the key level I will be watching for here, there is a gap. That's in a very bearish case scenarios that we come down, we fill that gap. I'm not going to be talking about that bearish case scenario. We're only going to be talking about key levels for now, where price could come down to. There is a daily fair value gap here, which we could see price come down and fill that level, that gap. Now, this is a level where you could see price bounce, which is 279.92 or 280, which we came down and we're bouncing off of this level. If price begins to break $279 on IWM, I expect this gap to get filled right over here. So a move that could happen to fill this gap over here. Let's move down to the 4-hour chart. We could come back up, and then we could fill this gap here and even retest this level over here at 271. This is a key level which you will be retesting on this chart. So this will be a key level over here. We're not going to be talking yet, but if you pay attention, this is a head and shoulder pattern. So you can continue to see more downside if the indexes continue to move more to downside. But key level I'll be watching for is how price react to 279, whether price is breaking 279 or not. If price break 279 and cannot hold it, then I expect this fair value gap at 277 and 274 to get filled and possibly come back down and retest 271 area, which is a big support area I would be looking at, 271 to 268 level. All right, let's look at gold miners, GDX. So GDX, interesting one. I'm also tracking gold and GDX. So it broke a major level for us here. This here is our band that as long price is above this band, we are staying long. However, price has broken this band as of Friday, and now we could expect an ABC retracement to take place, A, B, and C. Bullish case scenario, if you look at the 4-hour chart, is that price does not break this level, which is a bearish invalidation level, which is 74. If price hold this level, then you could think of this as a wave 1, 2, and you move to the upside. However, because of what I am seeing, I am leaning more bearish than I am bullish. I am 70% bearish, 30% neutral to bullish on GDX. So as of now, I think it is more likely that we see price come back down and retest this weekly support level here, which is a resistance flip support at 66.98. or retest this trend line right over here. So I think you can see a bit more downside here on GDX. So, and wave C, sometimes you see a 5-wave move to the downside, or 3 waves. You can see a wave 1, 2, 3, 4, and a 5-wave move to the downside. In a bearish case scenario, this is what I expect to take place. If not, you have A, B, C, and you end here. Respect 66.98, and you complete this entire sequence, and you keep moving up again. So your next buying zone would be within this blue box here. It's a huge area. I know it's a huge area, but somewhere within this level, and what was signaled that the bottom is in is if the entire market has shifted bullishly. That was signaled. So I'm gonna continue to look at GDX here, but this is one I'm looking to accumulate long term. So that's for the ETFs. Let's take a look at these. Let's take a look at some stocks. All right, here's Apple. So our algorithm printed a euphoria over here. Price did move up a little bit, but it pulled back. Usually that's the case. The signal is not always perfect. The algorithm printed a buy at the bottom here, and price moved down back just a little bit, but continue to move up. So it's just telling when institutions are buying, like a selling climax and a buyer's climax. It's printing signals for those. And it printed one over here as well. It did that for the ETFs as well, which I didn't show. And now what we're looking for here is a couple of things. If you're correcting this entire move at the bottom here, or is this move here, this is 1, 2, maybe a 3, 4, 5, very short 5, possibly. So, however, this here is an entire wave, impulse wave that has been completed. So we're looking to correct this entire move that has happened. So key levels that I'm looking for is a retest of this 288 level. So price could come back down anywhere within 288 to 275. That's the level I'm looking for any sort of pullback and retest within this level over here. This would be our key level I'm looking for a pullback and retest. Let me pull this chart up for you. Here it is. So you're currently in a range, and for a pullback, we're looking to retest this breakout over here, which is around 282. So that will be anywhere between 288 to 275. We're looking for that pullback to take place. Apple is currently in a range. That's the range, and you're top of the range here. That's what it's showing as you hit the top of the range over here. And you're pretty much correcting now, and you're probably correcting this key level over here. And what I'm looking for is a retest of 288 to 275 to correct this move, and you could possibly move to the upside. Now, looking at Apple overall in the market, I do think at some point there is a bigger pullback that will be coming, because more than likely you're probably going to come back and retest the bottom of this entire range at some point, or at least 243. When that happens, I don't know. But let's just move on. All right, that's for Apple right now. Let's do the 4 hours. Still think you got a bit more downside for Apple. So key level I'll be looking for in Apple here is this level over here to retest of this 288 level, at least 288 to 275. Let's call it 282 for now. Let's take a look at AMD. So AMD, I'm still looking for more downside for AMD. The first level is to fill this gap at 452. Let's put this here. Probably up here, maybe. Okay. So we're looking for this gap to get filled in AMD, but I still think AMD has more to drop. At some point, I think AMD is going to retest. Let me pull this over. AMD is going to retest 269, let's say 270, to retest this entire breakout over here. So at some point, AMD is going to retest this 279 level. When it's going to do that, I don't know. But I'm not a buyer here at AMD. But still see a bit more downside. Could come back and refill this gap over here as well. So for now, I'm staying out of AMD. Still see more downside for AMD, especially if the market continue to move lower. Okay, for Amazon. So Amazon is currently correcting February 17, 2026, pivot low, which is 196. So you are correcting this move right over here. So the market tends to move in an impulse wave to the upside. It's going to move in a 5-wave to the upside. And as you can see, there has been a 5-wave move to the upside. We've had a wave 1, a 2, a 3, a 4, and a 5. Once that wave, that impulse wave has been completed, well, it's not always going to be that simple, but whenever there's a 5-wave move to the upside, there's expected to see a 3-wave move to the downside, or an ABC, or a 7-wave move to the downside, which is a WXY. So currently, we complete an A, B, and right now you're in that C wave. So how do you project a C wave, or how do you project this entire move? Well, you've had the entire A wave completed, and now you're in a B wave. I'm just going to remove that. But for you to project where a C wave is going to land, you'll have to use your fib extension. Let's move back here. So educational session for this one. So you'll take your fib extension tool. If you don't know what that is, you come over here, your fib extension. You start at the top, wherever that entire move is ended, and you click. You pull it down to the bottom where wave A has finished or completed. Then you move it back up at the top of wave B, and you click. That has ended. So what you'll see the fib extension. Let me zoom in here. If you could see, you will see fib extension 1 and fib extension 1.618. C wave tends to move anywhere between fib extension 1 to 1.618. If you begin to break the fib extension 1, it is very likely, and a lot of times, the C wave will be an extended wave, which comes down to 1.618. So that is why I still think Amazon has a bit more downside, anywhere between closing out these gaps here on the daily chart, closing out these gaps anywhere between 239, let's just say 240 and 233. I think price is going to come down, close these gaps. If the market have a WXY, Amazon will very more than likely close out this gap at the bottom here. Now, if Amazon is to close this gap here, you're looking at a buying opportunity. So your first place of buying will be over here. Manage your risk really well, because you have to pay attention or think of Amazon even coming back down and filling this gap if the market does a WXY. So what a WXY will look like is you come down here, you bounce, move back up right over here. See this level right here? Come back up, retest this level, and you do one more downside, and you close that gap. That's what a WXY will look like. And that will come right over here, which kind of makes sense as well if the market does a WXY. So both case scenarios are valid. So the key level we're looking at for any sort of bounce is within this level here for Amazon. So we're not going to call this yet. Let me take a look at this. So what I see is happening here is that I do see within the C wave, there is an A wave, B wave, and a C wave could move back down. You could go all the way down to 228 or so. So you could come down here. If the market does that and give you this, look, I'm gonna start accumulating Amazon at that point. It could come back lower, but long term, I think Amazon will continue to move more to the upside. If you look at Amazon long term, so I don't mind start buying Amazon over here. I'm talking about shares, not options, into my long term portfolio. So that's what I got for Amazon. Let's take a look at Google. So two cases here for Google. There's two paths Google take. Google is, let me just, so this here is the band, which tend to act as a mean reversion where buyers tend to step in. So price continue. Google did an ABC. Google is currently correcting this move from the bottom here, which is that 270. So this is wave one, and now you need that wave two pullback. Now, you could finish that pullback right around this area here at 250 or so, right here, and that could complete a move. However, if the market continued to move one more leg to the downside, I expect Google to continue to push lower to the downside somewhere around this 330. At this point, there is a gap here as well, so it's possible Google will come down even lower to 306 and retest this band right over here. And this band is probably going to continue to move to the upside, retest this band, then Google continue to push the upside. Because Google has completed a 5-wave move. 1, 2, 3, 4, 5. Corrected that move all the way here. And now it's in another impulse move right over here. That's wave one. Now it's moving back down to the downside. So the market moves in a 5-wave moves. Wave two tends to be the more aggressive corrective move that you will see. Let's remove this for a minute. So that's Google. So you could see Google do an ABC to the upside, A, B, C, the upside, and then do the WXY. So this would be key level watching for. If Google start breaking this level here, 254, then you're going to see a WXY play out. So this here key resistance level is 382 and 354. Those are the levels that you're looking for. So if you bought Google over here, stay long. If you start breaking this level, you have a decision to make whether or not you're going to trim your position, you're going to exit your position, and re-add at the bottom here or not. Or if not, you want to keep your position and accumulate more. That's a decision you will have to make, but manage risk on every trade you're taking. Let's take a look at Nvidia. So Nvidia is still, I still think Nvidia has more downside. So Nvidia has, I think Nvidia is coming down within this blue box, and my target for Nvidia would be anywhere between 202 to 184, or the median would be 194 to come down and retest that level. That's what I'm looking for Nvidia. Nvidia is currently correcting pivot low for March 30th, 2025. This here was the impulse wave to the upside, and it's now correcting that entire move. Let's look at a 4 hours chart. So on the 4 hours chart, this here is a key level for Nvidia, which is 194, and that is why I have that level right here. Now, you've had an A, B, C to the downside. Now, why am I calling it WXY move in Nvidia? And this is important because you've had an invalidation level right over here. This was a key level. Call that an invalidation level right here. Because price has broken below the C level, it now will create a WXY because price will move lower, because now instead of having a 3-wave move to the downside, you will have a 7-wave move to the downside because you have broken. So now you're having a double correction. A double correction is 2 ABCs put together in an Elliott wave. That is how the market tends to behave in terms of behavioral finance. In technical analysis, the market moves in a 5-wave move to the upside in a bullish market, 3-wave move to the downside, which is an ABC, or you can have a double correction, which is the WXY, which is a 7-wave move to the upside. Sometimes it's more complex, where you can have an 11-wave move to the downside, which is a Wyckoff distribution. But for now, we are looking at this level here. Now, how am I getting this level? We just talked about the extension. You do your fib extension right here. You had your A, your B, and you had your C wave right there. So your C wave tends to be anywhere between extension 1 to 1.618. Now, we know you're having a WXY, so what we're going to do, you're going to start from the top here, this move. This here is the end of your C wave, which is now your W wave. You're going to click there again. Then you're going to come to the top here where you end your X wave, and you drop the extension tool right there. Now, once you have that, you will see your extension anywhere between 203 to 184. So we expect price to come down anywhere between 203 to 184 with a mean of 194 because it's a key level back here. Now, it is possible price could come down, sweep this level of 194, then move back up and find support and move to the upside. Now, in this Y wave, we've already seen A wave, B wave, and now we're looking for a C wave. So I'm going to do one more again. Extension tool, A, B, and C. Now, if you really want to narrow this down a little bit more for yourself, now you're gauging what the C wave is going to be. This is educational session. Now you're coming down, you're really trying to pinpoint a better entry for NVIDIA. And a better entry for NVIDIA now would be, you're going to make adjustments here. You're going to pull this down here. So now it's going to be anywhere between 199.74 and 186.29. You can still come down to 184 because you're in a larger WXY. So you could still leave this over here. You don't necessarily have to move that, but I'm moving the one to the upside because the C wave is going to be anywhere between the extension 1 and 1.618. Now, and there's a support level over here. So this support level is right in between in our blue box, the target zone. So guess where it is the most likely target for NVIDIA to come down? 194, 194.72. So that's the level I'm looking for in NVIDIA. I spend a little more time in NVIDIA because I want to make it a bit educational, help you understand how I look at price target, how I forecast where the market is going to go. Nobody could tell exactly where the market is going to go. Now, don't expect NVIDIA to just drop right away because the market moves in a three-wave move to the downside. So we're in a B wave. So you can expect and if I'm showing you, you want to really go down because you're day trading now. So if the market is going to pretty much correct this entire move, you can expect NVIDIA to have, within the C wave, to have A, B, and C. This entire C wave we're looking at here, you can see NVIDIA does something like this. Come back up, retest, and then come down. Because now within the C wave, you're getting another A, B, C to the downside. And that can go over and over. We're at the hourly. So depending if you're day trading, you want the best, the most accurate entry and exit points, you're going to have to come down from the weekly, daily, 4 hours, hourly charts. And you keep doing all the way down to the 30 minutes chart. I don't like doing Elliott wave less than a 30 minutes chart because it's not the best. You want to look at price action and so forth. But it's very likely you could see a bounce coming Monday or so, and that may fail and continue to move lower. So this is something I would be looking for. And let's remove this. Let's just see where that would take us if we are to use the extension tool from here in an ABC. A, BC. There you go. Extension 1 to 186. So now you're pinpointing even more, assuming this is a B wave, you're pinpointing even more at where this could go. And you can even make more adjustments to this by saying, okay, somewhere over here. So again, we're going to come back right at this level 194. So best level for NVIDIA would be that 194 if it follows the forecast. And that would be where you can go ahead and where I would go ahead and think about adding NVIDIA to my position long-term portfolio. There's a gap here that NVIDIA could fill. Obviously, could come lower and fill that gap, but we're not going to call for that. Let's look at Tesla. Okay, Tesla, interesting one. There's two ways Tesla could go. I have two scenarios for Tesla. I have a bearish scenario for Tesla, and I have a bullish scenario for Tesla. What you're looking at right now is the bullish scenario for Tesla, and Tesla is either correcting this pivot low. Anyways, let me pull up this chart for you so you can see it, first of all. So this chart here, Tesla is in a range. So right now, 337 is pivot low on this chart over here. That's the pivot low we're looking at. Tesla is either correcting 337 pivot low and you come down, but you cannot break this level. If you break 337, you are coming lower in an A, B, C, all the way down here. You're coming back, you're going to retest the bottom of this range, which is about, I have it on the other chart, but I'm going to tell you in a bit. This VWAP level right over here. That's where you're going to come down to, which is about around 270 maybe? Somewhere there, but in ABC. If it breaks this level. It's a key level we're watching for, and this 337 you're seeing here, that's this level, 337. So we're thinking if Tesla comes down here, Tesla's doing an A, it's in a B, and it's in that C wave. So anywhere within this box over here at 385 to 352, I expect Tesla to bounce within this level. Now, you can have a failed bounce in this level that breaks this level over here, and then you have a bearish case scenario, which is the one I'm talking about over here. And that's this one here. Is Tesla having an ABC to come down to 300 to 234 pretty much. And the key level where Tesla will come down to in a bearish case scenario is right at that 280 level, which you got from back here. Right over here where Tesla come down to. If Tesla does something like this, Tesla is providing you with I would say a lifetime buying opportunity for Tesla. That is where I would go very long Tesla if you get this move. And I kind of hope I got this move or we get this move so I could jump into more Tesla, adding Tesla to my portfolio. I wouldn't mind at all. So that's the two cases I'm looking for. Either you are correcting, let me see if I could, either you're correcting April 7, 2025, or you are correcting April 6, 2026. Either one. The only way of knowing which one you're correcting is if you're to break 237. If you break 237, you are doing the ABC and you're actually correcting the April 7, 2025 move. Oh, here it is, I think. It's daily. And this is the A, the B, and the larger C. So we're not entirely calling this yet because we still have to gauge whether or not Tesla is going to respect these level here. So this would be a bullish case scenario, as if you're going long Tesla, it'd be right within this box. So you do have SpaceX IPO coming out soon as well. So we'll see how that goes, whether or not there going to be any kind of rotation, money coming out of Tesla to go into SpaceX or not. But all right, that's for Tesla. Let's look at Bitcoin. Still think Bitcoin could come lower to $53,000 to $49,000. Still see that as a possibility. right within this level here, fib extension 1. You could come lower to 38, right? If you come lower to 38, you're retesting this support level right at bottom here. But for now, our key level will be somewhere within this level here, 51,049. Below $49,000, then you're looking at $38,000. So we'll take one level at a time. So Bitcoin is pretty much correcting this pivot over here that you're seeing. Let me just make a note of this. So you're pretty much correcting November 21st, 2022. You're correcting this entire move in it looks like it's in an ABC pattern or a WXY, but you're still distributing down lower, so broke. Okay, so that is the level I would be looking at for Bitcoin, somewhere here, all the way down to $38,000. Let me see what else I have. Okay, Palantir filled. It had a daily gap over here. It filled that daily gap. Um, I'm cautious with Palantir right now. I'm being cautious with it because it could still distribute lower. It's still trading below the bullish band that we have here, broke below it, and you got to be careful because once price start breaking below this band over here, it could start distribute really fast. So Palantir is at a key level that is retesting, which is this level over here. So this would be a major level of Palantir to hold, especially 105. If Palantir start breaking this level, which is 126, or this 200-day moving, or this 450-day moving average, then 105 would be the key level that Palantir will come down. You break this level over here, however, Palantir will come lower down to around 60 something dollars, which is right above here, right around here, around 72 to 60 something dollars. But for now, I'm just cautious. I'm very cautious on Palantir. I'm just going to keep it as that. Don't necessarily want to go long Palantir right now, but you can continue to bounce off of this level. But I'm just going to watch it very carefully. AVGO, still think there's a bit more downside. We actually call this one here the top. We actually call the rip, and we also call the top. It's in the Discord. Don't want to go pull that up now. But where I will be looking for price to come down and retest right around this 352 level here for Broadcom. So we've had an A, B, and we're looking for a C wave move to the downside here within this blue box. So I still think AVGO has a bit more downside to go. So be patient. If you're looking to buy, be patient. Wait for, I think it's best just to wait. It still has this gap over here. Fill this gap. And could probably come back down and retest this level here. And you're going to correct this entire impulse wave right between the 618 or so, right around this area here. Sophie, being cautious with Sophie. It's at the bottom here within our blue box where you can see a bounce take place. Invalidation level would be where that would be 1486. Let's just say $14. You break that level and you're coming back down to most likely 1263 level there. So I am being cautious with Sophie as well because you're trading below this band right here, but you can see price. Sometimes price could really start dropping. If not, you're going to keep moving around like this and you're going to just keep moving to the upside. But it's in a range and we want to see a bounce because you've completed this entire move to the downside and you had a wave 1, 2, 3, 4, 5. And now you're correcting this entire move here in a wave A, B, C. And we're assuming in wave C, we've had a wave 1, 2, 3, 4, 5. We're assuming this entire correction has been completed and it's ready for some upside. But if the market is bearish, well, you can continue to correct even lower. So we're going to see what it does. But at 1263, that's not a bad area to start accumulating, I guess. But we'll see what happens. Let me see if I have anything else to discuss. I think that's it. I think we're done with the overall market. This is the weekly update for the overall market. Hopefully that was helpful. Still think the market has one more leg to the downside. In an ABC retracement, you have all the key levels, so you know the invalidation levels. So that's the level we're gonna look at. Um, Trade those levels. All right. Have a wonderful trading week ahead. Take care. Bye.